And welcome gang members and non-gang members. I'm going to try to clarify what I think the market's going to do and why the market is so different this time than it's been in the last 5 years. But let's start with this. The indicators that we use is the VIX indicator. When this VIX is going higher like this, when it's going up, that means selling is going to stop and we're going to get buying. And here's how we know. VIX going up and the SPY is going the opposite way. So when the VIX is high, it's like a little poem. When the VIX is high, you buy because you're buying on sale, SPY, see? So another indicator is we're down at the bottom here. See it? Now, again, you can keep going down even though it's at the bottom. And normally she starts turning here. So I think that we have to consider, okay, one, that we have the race, the midterm Senate races. This is very important for the Democrats to win back their seats for the incumbents. The Federal Reserve is very political. The chairman is chosen by the president, and the chairman does what the president tells him to do. I cannot see in any way that the president would allow a stock market correction of more than, not even 10%, okay, even though we're pretty close to one, that he's going to pull all stops out and do A, tell Yellen that either announce that they're not going to do away with the $85 billion a month totally. Because remember, every month they printed and took $85 billion and bought mortgages, and they took and bought 10-year treasuries so that the yield would be very, very low and not very attractive. And that forced everybody into the stock market. I'm talking to big countries who do business with us. All right. So the Fed may announce that. And that's what they've been doing for 5 years. It's called quantitative easing. So there's, because of the election, well, Obama, tell Yellen to announce that we're not going to stop QE totally. And if we get an announcement like that, very possible. So now we got the VIX telling us we could get some buying coming in. I just showed you that. We got the outside the technicals of a chart, which is very unusual, is what will the president do? Okay. And then finally, we got what the charts are telling us. The banks, which are the most important indicator, stopped coming down, and it's in a perfect pattern for a rally. See this here and this here? This is called the higher low. And see how she's ready to turn like she's turned here? So this tells me it's always the banks that lead us out. So they could stop tomorrow because tonight they didn't break through that 200-day moving average. See it? I want to see it break through the 200-day. This was the most important thing. So it didn't happen. So it looks between the VIX, like this, going up, which is an indicator the selling is almost completed. There it is, coming down. And the XLF has not broke through that 200-day. It should have. And we only had, and then let me go back to the banks, XLF. And the banks, as I say, hasn't broken. But now one more indicator. The small mid-cap stocks, which started this whole breakdown in the market that I said would happen. Remember when I said to you this market's going to break down and nobody believed it? And it did. IWM. When the S&P was going up, this was breaking down. I told everybody pay attention to it. But here's what happened today, which was interesting. If you look at today on the S&P, at the very end of the day, we didn't get the play that we normally would get. We should have, see this big red line right here? See this red line? We should have got a big play today in here, a big play. We didn't get that. And this is the one that's been leading us down. And you see how this crossed over, this 200-day? That was our indicator that I told you that the stock market was going to start breaking down. And we got it, and the market broke down. So, but we didn't get the play here. So with the VIX, with the XLF not breaking 200-day moving average, IWM not acting the way I like it, I'm thinking tomorrow, even if the president doesn't have Yellen make any kind of announcement, I think the banks alone will turn this market around tomorrow and the next day. If I'm wrong, then we're going to be in for a hell of a move to the downside. Then what I'm going to do with my own personal account, and if you want to join the game, if you're not a gang member, and you can follow me with my retirement account, I'm going to put my money back in here that I took out on Friday, up in here, right there. I think I took it out. If I'm right, it was around there, 1631, I think, right? Or somewhere close to it. But my point is, I'm going to put my money back in because I'm not going to take risk with my personal saving and my personal retirement money. It's not trading money. So when I see I'm hitting all these different kinds of things going on, it's almost like a crapshoot. I don't need that because I'm going to try to get up to here. So if I get all this crap behind me, I'll be happy to go from here to here with no risk. So if I'd rather get all the noise and all the answers I need and get. Okay, I got out at 1623 right here. Okay, and then here's today. And I said, I'm going to take my money, and I should know with the banks, okay, in the next 2 days, this should be around 17. If the banks are fine, everything's good, and we're going to go, and the market's going to keep going down, then this would be a good time to short the Qs. All this is shorting. Let me show you if I'm confusing you. What I'm doing is the inverse of the Qs. See, these are you short the Qs. See how right here, this is where the support's starting, right in here. Okay, and it's coming down to the bottom here. My point is, this is the Qs. I do the opposite. I buy what's called an inverse. Now, why I buy the inverse? Because just a lot of people, they have trouble shorting. This way here, you do it just like you do everything when you buy. So as the market crashes, you're making money as this goes up. So I'm good to go. And if I got to get back here at 17 to catch 21, because that's what I'm looking for, a big move. Okay, I'm not. If I'm looking for trading, I come over here and use this chart. Here, I'm trying to catch a move to 21. That's what I'm trying to catch, a market crash. Now, as I'm trying to catch this. Okay, where this comes down, to way down this area down here. Okay, that's what I'm looking for. Big, right down in here, at least down here, or at least down here. So why would I take any chances with my retirement money and get caught in this nonsense here? Okay, it's not worth it. So I'll know in the next couple of days. So again, we'll see. I believe that they're going to try to turn this around. I don't think they're going to give me the opportunity to do this, but I'm going to win anyways. If they don't, if they decide to run the market, okay, then what I'm going to do, if they're going to decide to run it back up, then I'm going to go in and I'm going to switch my trade to EEM, emerging market, right here. When this crosses over, see it's getting ready, and this turns green, then I will buy this, the emerging market, and catch a nice move to the upside. So so it's all about, will Yellen make an announcement? Will the banks play their games and take their set aside for bad loans and put it into the bottom line to make the numbers look better? Are the corporations after 5 years going to say, now's the time, you got to show me top line performance and margins. We didn't care up to this point, but now we care. It's been 5 years. See, all that's called all noise out there. So you can trade, but you certainly can't be investing with that noise. And I'll be ready to get back in my investment on either the PSQ if the market starts crashing because the bank's too terrible, or if we stop going down, then I'm going to get ready to go on EEM, and as the market goes up, make money going that way too. Okay, so that's what I believe. I believe we're going to stop, turn around, and are going to try to run this market next couple of days. Okay, that's what it looks like. If I'm wrong, then I'm just going to continue on my way, shorting the market, making money to go down by buying enter back into my PSQ. So either way, it's not important if I'm right or wrong because I'm going to make money either way. Okay, but that's my best thought. This has been the most difficult market to read because of those things we just talked about. We haven't seen this kind of stuff going on in a long time, and that's why if you're a long-term investor, Don't be out there gambling. Just stay with me with my retirement fund. Just do what I do, okay? All right. And then if you want action, you always can do with on PT1 with Donnie inside the classes. That is it for today. Hope this explained why I think we're going to stop going down here. And if we don't, then that's okay. We'll make money. See you on the charts.